What's happening to the stock of Axon Enterprise, the maker of tasers, police body cameras, whole suite of evidence management software? When Axon reported last night, we got kind of a messy third quarter, and the stock got hammered, down roughly 9%. There's a lot to unpack here, so let's get right to it with Rick Smith, the founder and CEO of Axon. Learn more about what's going on. Mr. Smith, welcome back to Mad Money.
Hey, it's good to be here, Jim.
All right, so Rick, we've known each other for years, and it's the first time I've seen a miss, so to speak, and I just thought we'll go right at it. It had to do with some earnings, I guess, a cost side and tariffs. Can you just explain it to us so that we understand what went wrong? Because it may have been flagged previously, and people were just kind of caught unawares.
Yeah, no, this is far from a miss. We turned in a really strong quarter. And look, I've been doing this 25 years. This is the fifth time we've had a strong quarter, and then the stock drops. I think the thing people may have gotten confused about was GAAP EPS. So we don't guide to GAAP because of our stock compensation, right? We have stock that's tied to the compensation that's tied to the stock price. So the better the stock does, the higher our stock comp goes. So what we guide to is adjusted EBITDA, and we came right in at 25% adjusted EBITDA. And we gave guidance on this year a couple of years ago. It's going to be a $2 billion year. It's lining up to be $2.7 billion. So the thing that I think confused folks was between the stock comp and then the one big beautiful bill changed some of the tax accounting around R&D. And so that showed a GAAP net loss. But if you actually get rid of all the weird GAAP stuff, adjusted EBITDA was 25%. So we're maintaining profitability and still growing our seventh consecutive quarter over 30%.
Okay, I want to be sure, though. You did say the tariffs would have an impact on the supply chain. That was on the May 7th call when we spoke last. And I want to be sure that that's not a serious hit to earnings, because a lot of people were confusing the $1.17 versus $1.52 as a problem with tariff. I want to take that off the table if I can.
Yeah, you can. We still hit our numbers. Now, we said that margins were less high than they would have otherwise been, but the adjusted EBITDA number still came in right where we said it would. So we're able to absorb that and still hit our operating numbers.
Okay, so talk about these acquisitions, particularly the 9/11 acquisition, which I thought made a ton of sense, but some people were saying represented older technology. Again, I didn't understand the objection, but let's have you tell people why this is a good acquisition.
Yeah, so let's take a step back. Last year, 240 million phone calls were made to 911. And a 911 phone call comes in on a technology stack right out of the 1970s, right? You could be doing this on a rotary phone, and 911 has no way to take video feeds, location feeds, et cetera. So we acquired a company called Prepared 911 that has the most modern technology stack for taking 911 calls. We can layer in an AI agent that helps the human operator so that we can do real-time translation. We can help keep real-time summaries. We've got a whole bunch of AI tools that can alert people like the Real-Time Crime Center, be able to dispatch a drone immediately. So the reason we made not just one acquisition in this space, but two, is because we now have the most modern technology stack for handling 911 calls. Our second acquisition actually not only layers in AI, but can replace the entire call center. You can run it from the cloud. And so that means, you're not stuck on an old tech stack. We can move your entire tech stack to the speed of modern technology.
Now, what's the reception? I am sure that some of these different police departments are a little bit hidebound, might not want to try this. How are you convincing them?
Oh, man. So we'll point them to, we had one major city this past summer that deployed Prepared 911 right before a holiday weekend. And what did they see? Even though call volumes normally spike, and their call volumes did spike, the number of calls that operators had to handle dropped 33% because AI was able to take on all the non-critical calls, like a noise complaint. Look, you don't need a human operator during a busy weekend taking noise complaints. AI can do that. So we're seeing tremendous interest from our customers. We just made the announcement of the second acquisition yesterday. I can tell you, the thing I focus on is customer reaction, and they're seeing that this is our opportunity to come in and totally disrupt the whole mission-critical voice space.
All right. So one last thing, the massive market opportunity slide, $159 billion, against what I heard on a Motorola call, Motorola Solutions, last time they spoke, where they say they now have a product that can compete with yours, SVX, the AI-driven assistant, and that they are starting to win business from you. Now, you are a competitive guy. What should I do with this Motorola conference call, which says, listen, we are in to win against Axon?
Well, Motorola won the RCMP, I think, last year. And the RCMP actually tested the tech and then ultimately canceled it and came to us. So We don't spend any time focused on our competitors. We focused on winning in the hands of the customer. And, when we do that, things work out. So I'm confident we have the best tech stack in the industry. And, the fact our competitors spend a lot of time talking about us, is an indicator to me we're focused on the right things.
All right. That's the most appropriate answer imaginable. Rick Smith, Axon founder and CEO. Thank you for coming on, Rick. You always do, and I appreciate it.
Thanks, Jim.
I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Thank you, Harvard Business School.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.